Hello friends. For this month's monthly market update, how about that 3 times fast? Wanted to bring to you guys a little bit more of a deeper dive into what's happening with this real estate market here in the greater Charlotte area, that is. We had the opportunity here at Keller Williams to sit in with Mega Camp a few weeks back, where we got to hear Gary Keller take a deeper dive into the market trends, which I always think is a great thing because right now most markets are seeing really fast-paced moving things. So what I want to do is I want to do 2 things. I'm going to show you guys a couple of slides that came from our Mega Camp that show you some national long-term average trends, okay? Then I'm also going to share with you some comparisons of our local market here in the Charlotte region compared to where we were this time in 2019. So let's go back pre-COVID, right? So let's start with those stats. So our new listings, new homes that came on the market for sale, we're up 4%. Not making that number up, we are up 4% in new listings where we were back in 2019, okay? What that means is that we're still pretty close to about the same in terms of new listings on the market, okay? Our months of inventory, what that means is that if another home didn't come on the market tomorrow, all new listings stopped, how long would it take us to sell out of the current listings that we have in the inventory, right? Based on data right now, that would take us 0.8 months. So less than a month of worth of inventory in the greater Charlotte area compared to 3.8 months back in 2019, okay? Now, here's the number that's gonna make a huge difference for all of this. It's our number of pendings. So homes that have gone under contract. Compared to this time in 2019, we're up almost 21% in our pending market. What that is saying is that we have more buyers in our marketplace. We have the same amount of listings almost, but we have way more buyers coming in and buying them up. Why do you think that is? Well, mortgage rates, you guys, mortgage rates are so low. Mortgage rates are so low, not to mention that buyers are selling more, saving more money right now. Not to mention that starting back in, I think it was 2020, we have like 4.8 million millennials turning 30 every single year for the next 5 years. Well, now the next 4 years, okay? So that's a huge buyer pool, guys. That's the first time home buyer time frame. Our average sales price though has gone up 22.5% from where it was in 2019, okay? Let me break that down to you to show you kind of what a long-term national average looks like. So I'm gonna show you guys a slide, pop it into the video here. What you're looking at on the yellow line, that's 2021, okay? You can see that for 2021, we have actually hit in new listings. As you can see, we're still the highest that we've ever been, okay? This isn't a matter of no one wanting to sell their home. It's a matter of we have a ton of people wanting to make a move. They want to buy a home, whether it's upsizing, downsizing, just relocating because now they can work remotely. There's all kinds of different factors that play into that, but the point here is that we just have more buyers in the marketplace, okay? Now, I want to show you another long-term trend, okay? The annual home price, a healthy long-term average in, thinking nationally, right? The long-term average and a healthy trend is a 4% appreciation annually, okay? So I'm showing you a slide that's going back all the way to 1991 where you can see the curve of that 4% appreciation over time and where it should be, where we should be on that trend comparatively today. But as you can see, we took a massive dip between 2008 and 2011. That brought us way back down below that average 4% increase every single year. So as you can see, 2021, we just now surpassed that 4% mark again. So when you think about it, we just now got back to where we would have expected to be way back when if we didn't even have that housing crash of 08, okay? So it's not actually unpredictable that we would have been here with prices, all right? Now, the next slide that I'm gonna show you is something I've already mentioned. It's the mortgage rates, okay? This is gonna go back to 2012. Back in 2012 of January, they were almost at 4%. November of 2018, still pre-COVID, we saw them almost up to 5%. The average was right about 4.87. And then again, like I said, today, rates are still just below 3% on average. Get this, guys. Mortgage interest rates on a second property or an investment property right now, you can still get them below 4%. Obviously, that's dependent on how much you're putting down in your down payment and your credit scores. I mean, that's always going to be the same regardless, no matter if it's a first mortgage, second mortgage, or a second property. But are you hearing me? An investment property or a second home interest rate right now is still below 4%. We couldn't have borrowed at that rate on our primary mortgage back in 2018. It's a great time to invest in real estate. Do we think prices are going to go up next year? You remember that slide about the national average trend, 4% appreciation annually, how healthy that is? Do you think prices are going to go up next year? I do. Do we think interest rates will go up? I do. What does that mean for you? It means that today is still an amazing time to sell because prices are still steady. Prices are still up from where they were 2 years ago massively, right? And you can still borrow at a low rate before prices continue to go up next year if you're thinking about buying. So when everybody says, I'm considering selling, but I don't know if I want to go buy high, guess what? You're going to buy high again next year because the prices are going to continue to increase. That's what they're supposed to do. You want a healthy appreciation. Don't get me wrong, I don't have a crystal ball. Things happening in the economy all the time, right? But we can go off of the data that we have today. And I really thought that what Gary brought to us at Mega Camp was so valuable to be able to see that long-term trend. But here's what I want to ask of you. If you have questions about the real estate market, please reach out to me. If I don't have the answers for you, I will find the expert that does. That's a promise. I want to keep you informed. I want to arm you with the right information to help you make a great decision. Because if you're thinking about making a move, whether it's staying locally, whether it's moving out of state where we have tons of colleague partners, real estate agent partners across this nation that can help you wherever you're going, or whether it's just because you want to downsize, upsize, maybe you want to do a refi, cash out, HELOC, something where you can renovate. You love where you're at, but you want to do some renovations. Guys, I am not only here to help you buy and sell or invest in real estate. I just want to be a resource for you, okay? We have contractors. We can connect you with people who can help you with a HELOC or a home equity loan, or a cash out refi if you haven't taken advantage of these great low interest rates on your primary mortgage. Point is, let me be your friend and your real estate partner that can be a resource for you in any way related to this real estate market, okay? I appreciate you guys giving me a few minutes of your time today. Thank you so much. You're welcome to email me, call me, text me, DM me, whatever it takes. Hey, let's go for coffee. That's my favorite, okay? Let's meet up for coffee face to face. Let's talk about those questions, all right? Until next time, I thank you again for your time and hope you have a fantastic rest of your day.